Hello and welcome to a new month of interest rates. It is February 1st, 2023. The announcement about the quarter percent increase is public knowledge. The Fed funds rate was bumped up today, and as a result, you're going to see a number of companies have probably reduced their pricing. Not all, but a number, including us, have reduced our pricing by quite a bit. This might seem odd. They're increasing the funds rate by a quarter percent and lenders dropping down. It's not really odd. What happens is the lenders have to anticipate what's going to happen. They can't afford to be reactive. They have to try to be as proactive as much as possible. So typically bake in the anticipated changes in advance. And then when the real changes occur, they can reprice accordingly. So you're going to notice actually some pricing has went down considerably, and we're going to get into that right now. We are on the United Real Estate Capital website. You can see the address up here, urecapital.com, and we are in the interest rates section. All right, coming on down here, always starts off with some market indicators relative to mortgages. We got the 10-year Treasury down from yesterday at 3.397 from the last time it was measured yesterday. And then from the last time these two mortgage-backed security indicators were measured, they are up from yesterday. So it's not surprised to see the pricing down, because as we've mentioned before on these videos, when you see the 10-year Treasury trending up and the mortgage-backed securities, oh, I'm sorry, let's back that up. When you see the 10-year Treasury going down and you see the mortgage-backed securities trending up, you'll typically see the mortgage rates going down. So those rates usually have an inverse relationship to what the mortgage-backed securities are doing, and the mortgage rates usually track right along with the 10-year Treasury. And of course here, this doesn't change until every Thursday. This is the Freddie Mac primary mortgage market survey of the 30-year fixed loans. This is an average of what customers are getting on their 30-year fixed rates from thousands of lending institutions across the country. That average for this past week has been 6.13. This will be updated tomorrow. All right, let's jump into the interest rates. You can see this is as of 1:25 p.m. Pacific time. We've got the same rate spread as usual. United Real Estate Capital features a multi-rate pricing platform, makes it quite a bit easier for customers to gauge what's going on, and also gives you more opportunities to see what choices you have. The spread is 5.125 on up to 7.375. Let's jump into the historical rates to see what changes occurred since yesterday. All right, so these, of course, are available to everyone. Just click on let me go back to the last page in case you missed that. Just right down here so you can see the past rates right next to the cool sunglasses. Click on the past rates, and we've got today is included and yesterday. So let's just take a look. We'll go to the high, we'll go to the low, go to the middle, and move on. 7.375. Yesterday had an APR of 7.375. There was no closing costs and a credit to the customers of $3,094. Let's compare that to today. Going on up, you can see today 7.375 with a 7.375 APR, and the credit went up to 3,631. So that's a nice little jump there for the customers from 3,094 to 3,631 bucks. All right, let's go on the low side here. Let's check out the 5.125 interest rate. So yesterday, 5.125 had an APR of 5.475. That brought the cost, including things like title, escrow, appraisal, sub-escrow, all the knickknacks in there. And points and lender's fees, of course, 11,513. Look at the drop here. So the APR went down from 4.75 on the tail end to a 4.02 on the tail end. So you see that drop there, and then that's reflected in the cost here. 9,173. So down from 11,513 from yesterday to 9,173. Let's finish up in the middle of the pack here. This has been a really popular rate for various lenders to advertise, this 5.875. So you can see yesterday 5.875, APR of 6.002 with total cost $4,082 estimated here. And now that 5.875 APR dropped from 6.002 down to 5.953. And of course, once again, that is reflected in the closing cost. Closing costs dropped down from 4,082 down to 2,525. You can check out the rest of the rates in the middle of the spectrum at your leisure on the United Real Estate Capital website in the interest rates section. And don't forget to, if you want to come down here, let's go back to the main rates page here. And if you want to come down here, you can see a list of all the estimated fees included in the APRs and the closing costs. Remember, the APR is a representation of closing costs added into the loan, reflected as an interest rate. Coming on down here, these are the disclosures, and something that we don't feature a lot of, but it's on the website. We have an ever-growing list of the competition, not so we can brag or anything like that, although we are one of the pack leaders right now. And of course, that may change, but it's nice to brag about right now. We are one of the price pack leaders in the country. But you see here, you've got these, but this is just to give you an idea of what's out there, make it easier for you to search without you browsing around to 100 different websites. We want to put everything in one place. And these are companies that are willing to show their interest rates and APRs right up front on their websites, which is a very good thing. There are a lot of companies that do not do that. We are one of the companies that does, not only do we do that, show the rates and the APRs. Well, the APR is required by federal law, but not only do we show our rates, but we also show the closing costs. So ideally, you'd want to go with the company that is disclosing everything right up front. But at a minimum, they should be showing their interest rates on their website. If they do not, there is a reason why. I would move on to one of the companies that's upfront enough to show the interest rates on their websites, like these companies listed right here. All right, so we're going to go ahead and finish up. I'll just leave the rates right there. You can take a gander at them while take a minute to finish up with a little prediction. All right, so with predictions, pins. If we have a deep recession, and I don't really hear word of that being a thing, but if we did have a deep recession, I could look to see this 5.125. Oh, let me back up. I'm sorry. Before I talk about the 5.125, interest rates this year, doable interest rates. That's my little term that I use for interest rates that a lot of customers are most likely to get. Because this one, right as it stands right now, the 5.125, this rate will work out for certain people. Even though it has this much in cost, some of you might cringe if you're not familiar with how rate pricing works, but this is going to save the most money for some people depending on what you are doing. Long-termers, definitely, the interest rate always wins out in the long term. That's why the APR is lower. You see this, even though the costs are 9,173, the APR of 5.4 just happens to be the lowest APR here. So the second purpose of the APR is to let you know which rate saves you most money over the term of the loan. And in this case, this one has a lower APR. Has the highest cost, yes sir, Bob, but it also has the lowest APR, which is an indicator that it will save the most money over the term of the loan. But you have to live in the house long enough to make it make sense. So that's why it might not work out for some people here. So back to what I was going to say about the 5.125. Right now, maybe it's not doable for a lot of people because they're going to be bolting out maybe in 7 years, 5 years or so. Who knows what? But this one, if we have a deep recession, this is my call, my prediction. I expect that to go down to the pricing range of, say, this, where this 6.125 or 5 point, well, I'd say as low as where the 6.125 or the 6.875 is. I say as low as that. I say it would definitely hit this one right here. So in other words, this 5.125, while it costs 9,073 right now, 9,173 as of right now, if we had a deep recession, this 5.125, my prediction would go down to, say, either cost like this, 900 and something bucks, or maybe even no cost with a credit like the 6.875 is sitting right now. So that was my prediction. If there is no deep recession prediction, if we just have like a little mild recession or no recession at all, I'm going to predict that, say, a rate like this 5.625, I'm going to say this will definitely be in the range of a no cost one. this will definitely get down to something like maybe like this 6.875, maybe no cost with a credit going back to you of around whatever, $800, $1,500 or something like this right now. So those would be my predictions. We definitely are going to be in the doable range of 5%, somewhere in there. And depending on whether we have a deep recession or just a little baby recession, 5.125 would drop down from cost sitting at right around 9,000 something to cost of about maybe 940 something, 800 something, or no cost in a credit. And then if not, I say we'll definitely get down to 5.65 with no cost or maybe extremely low cost. All right, so that wraps up the interest rate update for the first day of February. Any questions? Feel free, if they're open questions, drop them down in the comment section. I know a lot of these questions are, you know, sensitive, so feel free to reach out here in the contact section on this page here. You can just call the 800 number here, 800-298-8474, or fill out the form here and send us something that way. And if you do send us something this way, we are only going to respond with the information you requested. We will not spam you. Thanks for tuning in, and we'll see you on the next one. Have a great day. Oh, I'm sorry. Please make sure to bookmark this site. I mean, you can subscribe to the channel if you want to get these rate updates, because we'll continue doing it on YouTube. But if you want to, make sure at least bookmark this website so you can come back. This is like one of the few places literally in the country where you can just get open information like this in a form that makes it a lot easier to digest. So don't forget, please bookmark the website, or feel free to subscribe, or do both. All right, take it easy, and we will see you on the next one. I'm going to get back to work now.